Stocks looking to rise on the week as we are awaiting Friday's session. Fractional gains pre-market as well. And joining me now with more is Ben Emmons. He's a founder and CIO at FedWatch Advisors. Ben, welcome.
Good morning, Kristen.
It's great to have you in the studio here. We've seen obviously some changes since you last joined, notably that disappointing jobs report, higher expectations now that the Fed will cut in September, and a new Fed board appointee by the president. What do these signals tell you?
Well, lower rates are coming. That's, I think, the real clear signal here, because this Federal Reserve will always react sharper to a weaker employment report than to a, say, stronger CPI report. So we could well have a stronger CPI report next Tuesday, but they're not going to take that much into account. It sounds like, and it's really happened now the last sort of 3 days, that one Fed member after the others follow one another with the same comment as Waller's already saying for voting for a rate cut in July. This labor market is weakening. It's not in a good shape. If we're not careful and we don't cut rates, then the unemployment rate may go up too fast and we can't stop it. I think that thinking is now within the FOMC, and why you're seeing this probability near 100% for September. And then this appointment that Trump has now made is only an additional voice to that chorus. So you can expect that lower rates are coming.
How does President Trump's new appointment to replace Kugler on the Fed board impact that body?
Well, so he's obviously strongly in favor of lower rates, but it's also about someone who probably voices more what they're thinking in the administration of this economy needs more boost from rates. We have too much high rates that holds housing back. Investment is not picked up yet. It would be incentive to investment if you bring down rates. So I think those are ideas that he will probably voice there, whereas Waller and a bunch of others are saying we want to lower rates to make sure that unemployment stays controlled and we're not letting a unemployment rate rise too quickly. Whichever argument works out the best or has the most dominant, for markets, all that really matters is that if you're going to start cutting rates again in September, will this also be in October and December and next year and so forth? Or is it going to be one rate cut and then that's it?
Yeah. I do want to ask about how trade is impacting all this, because we did also see new levies, reciprocal tariffs, as Trump has called them, announced at the beginning of August. Those went into effect at midnight on Thursday. How does that shape your economic forecast?
It's amazing how these tariffs are currently viewed by markets as not holding the economy necessarily back. One, we know what the tariffs now are. That was the big issue in April. Huge numbers, but we didn't know what the tariffs really would be. So that's an important change, because uncertainty is one of the reasons why the economy has been sluggish. Secondly, the tariff pass-through, as we talked about, like, yes, you'll see coming through CPI, but it seems to be very much of a game of microeconomics. In other words, you have a foreign exporter that absorbs some of that tariff in its margin, and you have the importer here that absorbs some of the tariff in their margin. And how will then be passed on to the economy? That's not clear, but it seems to be limited for now at least. So it doesn't really affect the economy, I think, at this point.
Interesting. So what else is on your radar in terms of what our viewers should know as we're approaching the middle of August and September is just around the corner?
Yeah, it's, August has always been this kind of like a bit of a sluggish month. So you could have a little bit of trepidation again in markets for whatever reason comes along. Obviously, we gear up for this FOMC meeting in September. We'll see if Miran actually gets confirmed before that. That will be significant, I think, if he does have a seat at the table in September. Otherwise, it's really about we're getting through the earnings season. Really good picture that actually we have a lot of also companies that are beating on revenue, not just earnings. That's a good sign, actually. Means that there's actually not much effect from these tariffs. And then lastly, as I mentioned before, like the cycle of investment, that all these commitments that continue to be made to the White House for zero tariffs if you invest here, I think that's the next quarter's really first impact there. Are we going to see companies actually putting money here to start investing? I think if that actually happens, we'll get an acceleration of the economy.
Interesting. And so what that means for equity markets, of course, you mentioned some seasonality at play in August, but what might we see by year end?
Well, I'm of the camp that we potentially are in this sort of a repeat of 1999. You get a sudden, really acceleration to the upside. Because if you take the OpenAI news from the other day of their valuation, it's really significant in my view, because if we're putting a number on something like artificial intelligence, and they're at the forefront of all the models that have been put out there, then the market has a lot to gain from that, because the chips makers, the related software providers, you name it, all going to be gaining from a valuation from OpenAI. That's that accelerated upside. In addition to this investment coming in the US, you know, the S&P has been carried partly not only by tech, but by sub-indices like heavy electric equipment and electric components, companies that are not really known, but are up 50, 100% year to date. I think that this all underscores that this market is looking at this tariff policies behind this. We know what they are. The investment policies coming into play with a Fed that's going to lower rates, with an OpenAI valuation, it could be significant. You're getting accelerated upside.
All right, Ben Emmons, he's a founder and CIO at FedWatch Advisors. Ben, thanks for joining.
Thank you, Kristen.
It's great to have you.